The ripple effects of the military confrontation in the Middle East have been clear here in South Korea since the start of this work week, when both its stock market and currency tumbled. With more on Press Perspective today. Welcome to Press Perspective for this Thursday, March 5th here in Seoul. I'm Min Sun-hee. Today we touch upon the broader economic fallout of a prolonged military conflict in the Middle East. For more on this, I have Lee Ji-hoon with Reuters here in the studio. Ji-hoon, welcome back.
Glad to be here again.
I also have Professor Yang Hee-dong at Ewha Womans University live on the line. Professor Yang, it's a pleasure to have you with us.
Thank you for inviting me.
Right, Ji-hoon, we shall start here in the studio. Let's begin with the repercussions of the military conflict in the Middle East on global stock markets.
Yeah, globally, this week market volatility heightened with oil prices rising to the highest levels in more than a year, and with Brent crude rising above $80 per barrel on worries about energy supply disruptions. The US dollar hit 3 months highs as higher oil prices sparked inflation worries and risk-off sentiment. US stocks were also volatile this week, but the market impact was particularly hard on Asian stocks such as South Korea, Taiwan, and Japan, because those Asian countries are heavily dependent on oil supplies from the Middle East. And in Asia, South Korea was especially hit hard. This week, the dollar-won exchange rate hit the psychological barrier of 1,500 per dollar for the first time since the global financial crisis in 2009. There was quite a rise because just last week, the won was trading around 1420, with the central bank governor saying foreign exchange market conditions were improving. And then on Wednesday, the stock market crashed, falling 12%, which was the biggest daily percentage fall in the stock market's 46 years of history. Circuit breakers were activated for the first time since August 2024. And combined with Tuesday's 7% drop, our market capitalization fell by $500 billion in just 2 days. Analysts say South Korea was hit hard because it is the fourth largest oil importer in the world, with 70% of oil purchases coming from the Middle East. Also, South Korea's stock market had been on a world-beating AI rally, with the Kospi more than doubling over the past year. So that was why it was more vulnerable to profit-taking pressure after this geopolitical conflict in the Middle East. Today, Kospi rebounded sharply after authorities fought market stabilizing measures, including 100 trillion won market stabilizing program. But analysts say volatility will remain high at least for some time because when it comes to geopolitical risks, uncertainty is inevitably very high.
Right. Professor Yang, as Ji-hoon mentioned earlier, what more can you tell us about the Asian stock market being more vulnerable to the volatile situation in the Middle East?
Well, I can think about a couple of reasons behind this very big fluctuation. The first one is, particularly in Korea, the stock price have increased too much this year and also last year. For example, Kospi increased about 76% last year, which is number one. And within this year, I mean, during the last 2 months, in January and February, Kospi increased almost by 42.2%, which is still number one, followed by Costa, about 29%, which is number two. Whereas Taiwan, 23%, Japan, 17%, China, about 9%, United States, Standard & Poor's, about 0.5%. So many investors, particularly foreign investors, are really concerned that they're looking for the right timing to sell their stocks. And the second reason for this big fluctuation is our dependency on export is too much, exceeding about 42% as of last year. right, compared to the GDP, whereas Japan, their dependence on export for the GDP stays around 18 or 19%. So if as Iran declared to block the Strait of Hormuz, if we have a problem in that region, we can think about the three very bad impacts on our export performance. The first one is, our energy will be in big trouble because we depend on the Strait of Hormuz for the 70% of our import of crude oil and also about 20% of our LNG import. And number two, we kind of have a problem in the delivery lead because this area is very important for the delivery and export of the items. If this area is blocked, then we can suffer from a lot of lag and the delay of the delivery of the stuff to those areas and to other areas in Europe. Number three, as report Ji-hoon Lee mentioned, we will experience big fluctuations for the exchange rate and also stock prices. Particularly, the foreign investors are really concerned about big fluctuation of exchange rate. For the past 4 years, Korea is one of the top 4 countries who has suffered a lot of big, exchange rate change. Japan, India, Brazil, and Korea are those 4 countries that have experienced very big exchange rate fluctuations. So if you're investors and if you really recognize the big fluctuation in exchange rate, you may hesitate to invest in the stocks in the Korean market. So these are the major impacts, major reasons why we have suffered the big fluctuations due to, the war between the U.S. and Iran.
Right, and adding on to that strong sense of anxiety, Ji-hoon, I believe there are also mounting concerns over the chip market. Could you tell us a bit about the outlook shared by the foreign media?
Yeah. So this morning there was a meeting among government officials and lawmakers as well as major South Korean chip-making companies such as Samsung Electronics. And at the meeting, the concerns were raised that there might be supply chain disruptions for the semiconductor industry because of this Middle East crisis. Chip makers often benefit from higher chip prices, but then they were concerned about supply disruptions for raw materials such as helium, which are essential for chip production. Also, it could be a blow for South Korean chip makers if data center constructions by big U.S. companies in the Middle East are delayed because of this crisis. Amazon said this week its data centers in the UAE and Bahrain are already damaged by drone strikes. And Microsoft and NVIDIA have also been seeing the UAE as a regional hub for their AI computing. When it comes to the domestic impact, the South Korean government said it has enough capacity to deal with short-term supply disruptions. And President Lee Jae-myung said today, after returning from his trip to Southeast Asia, that the government will make sure or make efforts to diversify energy supplies in the long run. The Finance Ministry also said the government will provide financial support to companies to help them cope with higher oil prices by utilizing its supply chain stabilization fund. And most recently, this afternoon, the government also said that it will crack down on excessive price increases by oil suppliers to help stabilize inflation or consumer inflation.
Right, indeed. Meanwhile, Professor Yang, over in the U.S., Mr. Trump has spoken of his military campaign against Iran lasting for about 4 to 5 weeks. That being said, what would be the impact of a prolonged warfare on South Korea, do you think?
Well, we can think about very different lag effect on very different items of our export, for example, or the domestic economic market. Well, the first one is immediate impact, particularly for the energy and the stock market, as we already have experienced. Yesterday, we have the experience of very bad, one of the worst ever, stock price drop, minus 12% for the Kospi, and minus 14% of Costa, and our exchange rate increase over 1,500. right, for dollars. That is immediate impact from this kind of a very bad disaster. And the second impact that may be realized in 2 weeks or through 2 months. I mean, such a very midterm impact will be realized for the business operations and global trade, because I already mentioned the oil refinery, chemicals, distributors, and the steel industry may experience very bad operations due to the pressures from the lack of delivery of energy. And export companies will experience a lot of lag in the delivery of their products, and also the freight, the sea freight company need to look for alternative routes to arrive at their original destinations. And the longest term that may be realized in 2 or 6 months are about the macroeconomic indicators, such as the consumer prices or consumption or investment. So in other words, as late as 6 months, all this effect from the disasters, I mean, during the war between Iran and the United States, will be realized in the macroeconomic indicators that may impact and press on most of the government to take care of their GDP, their progress, and also their controlling over the CPI. So you can think about as the 3 different timeline, I mean, immediate impact or mid-term impact, such as 2 weeks and 2 months, and long-term impact exceeding over 2 through 6 months.
Right, I see. Meanwhile, Ji-hoon, prior to the tensions in the Middle East, Mr. Trump had declared a universal tariff of 10% on all American trade partners after the Supreme Court ruled that his reciprocal tariffs were unlawful. What's the latest on that front?
Yeah, as you said, last month, the U.S. Supreme Court ruled that President Donald Trump's so-called reciprocal tariffs on trading partners are unconstitutional. And following the ruling, President Trump announced new 10% tariffs, or global 10% tariffs, which was later followed by another threat to hike them to higher 15%. The hike to 15% is expected to be implemented this week, according to U.S. Treasury Secretary Scott Bessent's interview yesterday. To be clear, South Korea was already, before Trump's new announcement, South Korea was already under 15% tariffs under the trade deal it reached with the Trump administration last year. And this new tariff is separate from sectoral tariffs, such as those on autos and steel. So South Korea, the immediate impact on South Korea should be limited from this new announcement. However, separately from this, and more importantly, there still is uncertainty over South Korea because President Trump earlier this year announced that he would raise tariffs on South Korea to 25%, saying South Korea was not following through on its trade deal. After his threat, South Korea has been speeding up its implementation of the trade deal by setting up a committee for selecting U.S. investment projects. And South Korea's parliament has also been fast-tracking the bill on U.S. investment package, which is expected to be passed next week. However, with the dollar-won rate rising above 1,500 per dollar again this week, there are some concerns raised again about foreign exchange volatility. And that is again raising uncertainty over the U.S. investment package again, because South Korea has said foreign exchange stability needs to be ensured for U.S. investments to take place.
Right. Professor Yang, speaking as a scholar, what more can you tell us about the impact of Mr. Trump's tariffs on South Korea's major export items, of course, including cars and chips?
Well, you may remember the Donald Trump declaration of Liberation Day, April 2nd last year. So he declared that the United States is liberated, whereas Korea was liberated from the Japanese colony a long time ago. So why did he say that? Because he thinks that the United States can be liberated from very aggressive trade from their trade partners. and he declared to charge about 10% as reciprocal tariff, and afterwards he declared another additional reciprocal tariff. So since October, during the APEC summit, Korea was supposed to levy for 15% for the overall reciprocal tariff. Now, this decision is nullified by the final decision of the grand court in the United States. But my point here is Donald Trump will look for alternative ways to keep very similar levels of a burden on their trade partners. They have a Section 122 or 232 of a Trade Expansion Act. They also have a Super 301 clause. So the Donald Trump and his government will look for all these alternative legal, the foundations, right, to levy the extra tariff burdens on their trade partners. So in short, no matter what happened in the low court in the United States, I mean, the actual burdens on us and Korean export companies almost remain the same. We already have about 15%, and still we'll have to pay about 50% for the export. And, the Section 122 or 233 or Super 301, all these legal articles, to rationalize, to charge their extra tariff on the items. These legal, the articles allow the Trump government to levy taxes for individual items, not the overall reciprocal tariff. So in the automobile industry, they are already aware of the 15% of extra tax. And semiconductors had a very superb job last year, and this year they already well know that they'll be charged for 25% extra tariff for very high end of semiconductors, whereas they can be freed from the semiconductors for the data centers. But anyhow, my point here is Donald Trump, why did he do that? Because he tried to persuade their trade partners to replace their export policy with direct investment in the United States. And, most of and all of the Korean companies have been prepared very well for their direct investment plans in the United States. So no matter what Donald Trump tries to change or the experience about different policies, I do believe that Korean companies are well prepared, are well aware of all this very highly uncertain trade policies from the United States.
Right then, despite the uncertainty over the U.S. trade policy, Ji-hoon, South Korea's exports during the first 2 months of this year as well noted remarkable growth. Could you tell us a bit more?
Yeah, exports rose 29% in February from a year earlier, which was faster than market expectations for a 24% rise. It was the 9th straight month of increases as the global boom in AI investment continued to raise demand for semiconductors. The 29% increase was weaker than the previous month's 34%, but there were calendar effects from the Lunar New Year holidays, and it was still the second fastest in the current gaining streak. In February, semiconductor exports surged 160% to hit a fresh record high as memory chip prices continued to rise on AI demand. Analysts say there is a high possibility semiconductor export growth will exceed 100% throughout the first half of this year. And last week, the Bank of Korea also raised its GDP forecast for South Korea for this year to 2% from 1.8%, citing stronger chip growth this year. Because of this chip-led export boom, analysts say the Bank of Korea is likely to hold interest rates steady throughout this year because strong growth will help the central bank focus more on financial stability risks such as exchange rate volatility. And this Middle East crisis is also raising upside risk to inflation. So more the reason the Bank of Korea will likely at least hold interest rates steady this year.
Right, I see. Meanwhile, Professor Yang, as we were saying, South Korea's exports and its stock market, as of today, of course, have remained largely resilient amid the presence of external risk factors. Do you suppose this trend looks to continue this year? And if that is the case, what support measures would you suggest to maintain this momentum?
Yeah, I still believe that this kind of very positive moment will remain in the current stock market because, as already Ji-hoon Lee mentioned, Korean company will realize a very handsome export performance this year. Already last year, our number one export item is semiconductors, about $173 billion, followed by automobiles, about $72 billion. And this year, I mean, in January, semiconductors increased by 34% for export, and automobile increased by 22%. Even in February, I mean, semiconductors even did a better job. Their export increased almost 161%. Why? Oh, why? Because there's a heavy investment on AI in the world, and this AI investment will go in parallel with higher demand for the DM memories, which is major the items of Samsung and also the Hynix. So that's why I argue that we may well maintain very positive forecasts and prospects for our export. And number one is semiconductor remain very handsome. Well, automobiles, even though they increased decrease about 20% in the export for the February, but because their manufacturing schedules were reduced in this month, because we have, lunatic New Year's holiday. So I do believe that lots of economic forecasts remain around 1.9 or 2% of annual growth for GDP this year. But the only, the uncertainty is, again, the war between Iran and the United States. And if there's energy problems or the delivery lag problems is to remain by a long time this year, I mean, our export absolutely will be dampened badly from these bad disasters. So that is the only risk I think about. So how can we, or how can our government can maintain this momentum? Number one is they need to try to minimize the impact from this war for the logistics and for the energy consumption. Number two, we need to stabilize the financial market for the stock prices and for the exchange rate. And number three, we need to persuade the lawmakers to, approve very fast all these legal preparations, which is heavily pressured from the United States. And number four, we need to diversify our export items. Still, we depend too much on those two items, semiconductors and automobiles. And this is not desirable, right? Because if we have problems with those two, so we need to diversify more items, including like KR, KFOOD, whatever. So these are the four major directions of government policy to keep the momentum.
Right. Perhaps tapping on, of course, on K-pop as well then.
Yeah.
All right, Professor Yang, as always, thank you so much for your time and your thoughts today.
Thank you.
And Ji-hoon here in the studio, thank you very much for your insights.
Thank you very much.
Right, that ends this edition of Press Perspective. Thank you for watching. Do join us again same time tomorrow for more panel discussion.